It's Friday the 31st of May and I'm looking at the dollar index chart. Okay, I'm not going to talk about currencies too much today. There's just nothing to say. We're in sideways trends. Dollar index needs to either break above 98.40 on the downside or 97.20 to have any direction at all. But look, we're trading sideways, so what's the point in going on and on about it? We did well on shorts on the Aussie dollar, and then more recently we broke above that trend line, and I thought perhaps this is the start of a bull run, but it isn't. Again, we're just moving sideways. So I think we could easily be in a longer term consolidation phase. We've retraced 50% of the gains. If we continue down, yes, we can retest the lower end of the range and maybe bounce back up. So anything from sort of 68.80 to 68.80, 68.60 up to 69.20, 69.40. These would be the tradable areas, and anything in the middle really isn't worth looking at. New Zealand dollar, we did well running shorts, and then I thought again that we were going to see a significant move higher, and we haven't. So silly me for looking for some direction. Again, probably just moving sideways on this now. The support down at the recent low of 64.80, so 64.90, 64.80. Watch on the downside. And then this midpoint around 65.25, 30 seems to be a factor. Certainly was yesterday. And then resistance up at 65.60, 65.50, 65.55. Those would be the three areas that would be worth a scalp trade, but position-wise, swing trade-wise, forget about it for now. Dollar yen also very much sideways this week, unable to hold on to losses or gains. So a bit weaker yesterday on the back of the weaker stock markets, I think. Clearly, let's just have a look. If stock markets continue lower, and I think you already know that I expect that to happen. So we've got a very minor trend line down here at 109.15. I would suggest a break below 109.10 would be negative for the pair, but again, not really anything to get excited about. Euro yen also pretty boring, not really doing much this week. But we are in a bear trend for about 6 weeks, so I think pressure is to the downside, and of course a break below this little spike low down here, which is at 121.56, should keep pressure to the downside. I'm just looking at the weekly chart here. Haven't paid much attention to weekly charts because there's just not been much going on. Okay, no. Yeah, this does show us moving away from that important 500-week moving average, which is, you can see how important it has been. So the fact that we're below there is also quite negative. Dollar versus the Canadian looking a little bit more positive. We've managed to break out above this trend line. We retested it yesterday. And today on the 31st, we're now looking to push higher again. So watch for the break above 135.46 to confirm a more positive outlook. We're already in a bull trend anyway with just these big consolidation phases. So yeah, I think you've got to fancy the upside as long as we stay above 134.80, 134.70. Okay, so gold, we've talked about this support level down around the mid 1270 area. If you were buying down here this week, that has worked. Little spike down to 1274, but not just above 1274, so not really enough to stop us out, which was lucky. We've now had a good run up, and we've broken through 1289, which was the kind of first resistance level I had really. So this now looks pretty good. 1296 we're looking for. 1296, 1298 would be the next resistance area. We get up through 1300. This is looking very positive indeed. If silver is to push higher, then we'll need to break out of this declining wedge pattern, descending wedge. So we're going to have to get up through 1460.65 resistance. So we close the week above there. It's Friday. It's the end of the month, end of the week. So tonight's close will be even more important. Get up through 1665. That's going to look pretty positive for next week. Oil takes a beating. I really couldn't understand, as I said yesterday in yesterday's video, why we spiked up from that level. That confused me. Anyway, the 500-day moving average seems to have done its job, and now we're lower. I've been quite negative on oil for a while. We didn't get a chance to sell it up here, which would have been nice. 60-20, 60-30. But anyway, yeah, lower, and I think this will continue lower. It looks like we've really got some room on the downside now. We've cleared a lot of support levels where we did find some congestion, but now really this looks pretty negative for oil. You're only starting to become oversold. There's still a lot more in the oversold territory that we can, we a lot more action down there, and we can stay oversold for a lot longer. I think, as you know, I'm negative on stock markets, so I think oil suffering from the same negative outlook for the economy. Right, now onto the fun stuff. The stock markets have been my focus for a while. You know why. We've formed a head and shoulders pattern. I've been negative on the stock markets for a long time. Well, I've been negative on the stock markets ever since we had this negative candle. So I think I can boast and say that I picked the top in the stock markets. I was certainly encouraged with that call by this potential huge double top, and it's just playing out nicely. So with a bit of luck, you've been running shorts for quite a while, or certainly you've been getting short on the bounces and taking any profit on the dips. If you were not short yesterday, you had the perfect opportunity as we jumped up to 27.95, I had 27.95, 25.05. Yes, it was a wide 10-point range, but you got well within that to get short or add to shorts. So this has just been easy, really. We're now retesting the week's low, and I think we'll break down. I think this trend will continue to the downside. We're now holding below the 500-day moving average at 27.77, so that looks good. We get below this 50% fib at 26.64, and we'll look pretty negative. You know, I don't think it'll take an awful lot for us to retest the March low at 27.22, and we've got some really decent fib support around 27.18, 27.15. For me, that looks like the next decent target, and I wouldn't be surprised to see stops activated, and we could really accelerate to the downside. Again, resistance at 27.95.05. I'd be surprised if we saw that again. I'd only be concerned if we close the week and the month tonight above 28.10, and that seems highly unlikely. Same for the Nasdaq. As I said weeks ago, this looks even more negative than even the S&P. We broke the neckline. We're holding below the 100-day moving average. Okay, we haven't got below the 200-day moving average yet, which is at 71.60. So that's the task for bears today, to get us below there, and then we can move down to 70.95, 70.85. So yeah, all looks pretty negative. We're looking a little bit more oversold in the Nasdaq than we are in the EMA and the S&P, but we can stay oversold for a lot longer. Now, the Nasdaq, being weaker than the EMA and the S&P, did not manage to get to my sell level yesterday. Missed it by about 10 points or something. But the Dow Jones did perfectly. I had 25, I think 25, was it 215, 225, or 25, 210, 220? Anyway, it hit it. So if you weren't short, that was your opportunity. That was our selling opportunity. And we've returned, we're dumping nicely now. So all we need now is a break below 24.930, and we're sailing towards 24.710, I think, quite quickly. We've got a little low down here at 24.862. That's the February low. I don't think that'll be too much of an obstacle for bears. What's this little peak up here? 24.830. Okay, so these are just little stops along the way, I think, before we hit 24.710, 700. We could hit it today, you never know. It should be decent enough support on the first test. Now, the only way things go wrong for the bears, wrong for me and my shorts, would if we get, I would say, if we get up through this low, which is 25.320, that would be a problem, and I'd have to be out of shorts, and then I would consider that this is more of a sideways trend than a bearish trend. That's, as you know, I'm confused as to whether this is a head and shoulders pattern. It looks a bit awkward, but nonetheless, we break below 11.820, and it looks pretty negative. I think we're now breaking below, what would that be now? Would that be Tuesday's candle? That would be Tuesday's candle. 11.806 was the low, so we're getting below there now. We should follow the US down for obvious reasons, and as you can see, there's not really any support, not decent support, until we get to 11.640, 11.620. So that's my target for the DAX on the breakdown. Just looking through the European stock markets, the FTSE seems to be holding up a lot better. I would imagine that's because of the weaker pound. The pound's got bashed again into the end of the week. So we've got the 100-day moving average at 71.60. We've got a little trend line down here at 71.50. We've got the 200-day moving average down here at 71.30. So these are the little support levels that will need to be broken, and we'll need a weekly close below, say, 71, or certainly below 71.25 for the FTSE to look more negative into next week. Okay, so the currencies have been a bit of a letdown. They haven't done great. I don't think we've lost any money, but we certainly haven't made the money that I hoped we would have. We just got out for a scratch. Gold's not been too bad if you managed to catch the gold trades this week, but the stock markets have been the real winners. They've been my focus, and hopefully you've been short with me on those and had another great week.